Now, friends, in this notification issued by MCA had defined two phases which were preliminary dependent upon the net worth of the companies. So based on the net worth, the MCA decided for which companies this Ind-AS should be applicable, and accordingly also decided how to converge with the standards, and if any companies fall into this phase in a subsequent period, in such cases what has to be done. So let's understand this. Now, on 16 February 2015, MC issued the notification which said that if a net worth of a company is equal or greater than 500 crores, such companies fall under the phase 1 of the Ind-AS convergence roadmap. Now, what does this phase 1 mean? These companies have to publish their first Ind-AS financial statements on 31st March 2017. So 2016-17 was the first year of application for the phase 1 companies. Now, subsequent phase 2 was any company which is a listed company. So in short, all listed companies and the companies whose net worth is about 250 crore, for such companies, the first reporting financial year under Ind-AS was financial year 2017-18. Now, these two phases are already over. So in 2016-17, India saw its first Ind-AS financial statements. Now, there are various peculiarities involved in this definition. What is the net worth criteria? What to do if Ind-AS is initially applicable and subsequently you're not meeting the net worth criteria? So let's understand this thing clause by clause. The MCA said that at the time of issuing the notification on 16th of February 2015, MCA said that the net worth position as on 2014 has to be considered for the purpose of this applicability. And if any company meets the net worth criteria as on that date, the Ind-AS has to be applicable. So what does it mean? If as on the date of applicability, the company is meeting the definition, the company has crossed the criteria of 500 crores, Ind-AS has to be applied in the financial year, or the company has to publish its financial statements under Ind-AS in the financial year 2016-17. Even if subsequently the net worth reduces, the company is not waived off from the applicability requirement and the company has to publish its financial statements under Ind-AS. Similarly, for the phase 2 companies, similar net worth criteria was given. If the company is meeting the criteria as on the date of applicability, the company has to publish its first Ind-AS financial statements in the financial year 2017-18. Now friends, this is the past. All the companies to whom the Ind-AS was applied in 2016-17 and 17-18, they have already published their financial statements as of the respective dates. What about the subsequent companies? If any company meets the net worth criteria, suppose I cross the net worth criteria as on 31st March 2019, in the immediate subsequent year, I have to publish my financial statements under Ind-AS. So, for example, if my financial statements as on 31st March 2019, after adding up the profit, has increased the 250 crores criteria. Okay, so in such cases, the Ind-AS will be applicable from the immediately subsequent financial year, which is 2019-20. So this is the case. You don't have any exemption for this. In case of listed companies, if the Ind-AS is applicable in the subsequent year, from your first quarter itself, you have to publish the results under the Ind-AS. So this is the case. So for every companies now to whom you are a practicing chartered accountant or in a company which you are into employment, please check as on which date the net worth criteria is probability that the net worth criteria will be met. Because in the immediate subsequent year, you have to disclose the financial statements under Ind-AS. So this was all about the corporate roadmap, friends. And what are the implications to this roadmap? Let's also understand in detail. The notification or the MCA notification also said that if any company is covered under the Ind-AS due to this net worth criteria, in such cases, any company which is a holding company, subsidiary company, associate company, or a joint venture company shall be covered in this Ind-AS roadmap irrespective of their net worth criteria. So what does this mean? If I am the company which is covered under the Ind-AS due to the net worth criteria, all my related companies which are associates, joint ventures, subsidiaries and holding companies, even if they are below 250 crores, even if they are having net worth of hardly 10 crores, will be covered in the applicability framework. And this is very important, friends. In my entire experience of past 5 years of application of this Ind-AS, specifically in case of subsidiaries, people tend to they miss out for the applicability of Ind-AS, because in case of associates, you are not aware about what is the net worth of the holding company. You just send your financial statements on a particular date to the holding company, and you do not keep a track. So accordingly, it is very important to have a track of the net worth of the holding company, because once it is applicable to the holding company, it is applicable to the associate company also. And we have seen defaults made by listed companies even, who were a associate of of a holding company, which crossed the net worth, and they did not publish the results under the Ind-AS. So this linked criteria is very important for us to understand. Otherwise, you will skip on to application for such linked companies. And the most important thing is that these companies should not, it is not necessary whether they're meeting the net worth criteria or not. Now, friends, this roadmap of 2015 or 2016-17 and 2017-18 was a corporate roadmap. The MCA or the respective bodies have also issued a roadmap for the NBFC companies. The criteria are the same. They have defined the phase 1 applicability. First time was applicable in financial year 2018-19, and for phase 2 companies, the first time applicability was on 2019-20. So this financial year of 2019-20 is the first time application of Ind-AS for the second phase of NBFC companies, which means which are crossing net worth of 250 crores or which are listed NBFC companies. So this is about the NBFC companies. Further, for the purpose of banks and insurance companies, the Ind-AS is still deferred. So the RBI had continuously started issuing notifications for applicability of Ind-AS to banks. Many companies tried the application also. They had to send the draft financial statements to RBI for the purpose. But there is lot of lack of guidance for the purpose of application to the banks and the insurance companies. And that is why the deferment is required, and Ind-AS application is not smooth how it was for the corporates, and accordingly for the purpose of banks and insurance companies, this applicability was deferred. Now this was the plain understanding of the definition. Let's go into the further criticalities, friends. For the purpose of determining the net worth, what should you consider? Should you consider net worth as per the Companies Act? Should you consider net worth as per your normal accounting principles? Should you consider net worth as per Income Tax Act? As per what should the net worth be considered? The definition of net worth is different under various acts. So that is why it is very important to understand what is the definition of net worth. So this definition says that net worth is nothing but your capital, your share capital, plus any kind of reserves which are formed out of profits. It also is deducted by any kind of accumulated losses, any kind of deferred expenditure recognized as asset in the balance sheet, and also any kind of miscellaneous expenditure which is shown as an asset in the balance sheet. So to summarize this thing, it is nothing but your share capital plus your reserves created out of profits, plus it is deducted on account of accumulated losses, deducted on account of your miscellaneous expenditure. Ideally, it is from a long time this miscellaneous expenditure. If you have miscellaneous expenditure as an asset, you have to deduct it from your net worth criteria. And further, you have to also deduct any kind of deferred expenditure capitalized in the balance sheet. So these were about the reserves. And further, friends, there are also some included in definition. So which are to these reserves? Revaluation reserve. So revaluation should not be in determination of the net worth. Further, any kind of reserves created not to be created in the definition of the net worth. So this is about the applicability of Ind-AS and the net worth definition. We also saw on what date this net worth definition has to be